Hey guys, welcome back to my channel where we help restaurant and hospitality business owners structure, grow, and exceed their business goals with tax and accounting strategies. In today's video, I will be sharing the 3 ways restaurant or hospitality business owners can choose to get paid. If you're a restaurant or hospitality business owner, then keep watching. There are many factors that impact your salary. When you're starting as a restaurant or hospitality business owner, you should start with a plan. The plan will cover startup expenses, equipment, supplies, staff, recruitment, and training and overhead operating costs. Now, part of the overhead should include your salary. You'll choose how you would like to get paid or draw it as a salary. As you start your venture, typically a restaurant or hospitality business owner will take a percentage of the profits as a salary to make sure the operations remain financially viable. Now, when a restaurant or hospitality business owner could pay themselves can be tough. It's not uncommon for restaurant or hospitality business owners to go without paying themselves a full salary for an extended period of time. From my experience, restaurants and hospitality business owners require time and proper management to be profitable. The average time it takes a restaurant and hospitality business owner to show profits would be 18 months. Roughly, they keep about $6,500 worth of profit for every $100,000 in revenue. You should investigate paying yourself, but also be wary of paying yourself too much. Structuring your business entity could have a lot to do with the way you get paid as a restaurant or hospitality business owner. That could also have different tax implications. Now, I'm curious, guys, did you know that you have different options to pay yourself as a restaurant or hospitality business owner? What could happen if you don't pay yourself something? Mental health issues? There is an array of so many things that could go wrong if that happens, like burnout, getting to a point where you don't want to continue doing what you loved doing. I say this because of my own experience and some of my clients as well. Remember, we go into business to reap the benefits of your hard work, right? I did, right? Now, these ways are typically as follows. The ways, now, the 3 ways are typically as follows. As a sole proprietor, single member LLC, partnership, or corporation. For those of you that are in business already, your original legal structure of your entity is not set in stone, and you can change it to fit your current needs. Here are 3 examples. Number 1, a sole proprietor or single member LLC. You can pay yourself from your profits, which you can do what you want with your money, because that is seen as your income when you file your taxes. You'll be taxed with self-employment taxes, which is 15.3%. Here you can write yourself a check from your own company's bank account. Now, before I continue, please make sure you have a business checking account separate from your personal account, and you're either writing yourself a check and sending it to your personal account or depositing it into your personal account. That's really, really important. I say this because I've seen this with most of my clients, startup clients, and it is such a hassle to really clean it up and make sure that they are, writing themselves a check and depositing it into their personal account, because I will say that it is going to be really expensive for you to fix or, adjust the corrections, and it can be really expensive. Okay. Now, if you find yourself in a pickle and you're not sure how to go about it, I have set some time to speak to you. So click on the link on our description and schedule a quick call with me if you have any questions. Okay. Number 2 is to elect to be treated as an S corporation. You could pay yourself under payroll, where you would have your payroll taxes like FICA and federal taxes withheld. FICA is comprised of the following taxes: 6.2% for Social Security tax and 1.45% for Medicare tax, and also your federal taxes. Also, any remaining profits of the company would be distributed as draws or distributions and would be taxed at a lower rate than your salary or income. What you choose has to make sense for your business, right? Every situation is different. You have many options. You can, in this option here, you can avoid double taxation, which is once at the corporate level and once at the individual level. Now, in this third option, it would be getting paid from your corporation. You would be considered a shareholder as a closely held corporation, a single or few shareholders. An owner who works in the business must be paid a salary by the corporation. As an owner, you can set a salary based on what is comparable salary, what your comparable salary would be from the job you're doing and the projected profits of your business. Now, the rules require working shareholders to be paid a salary so that Social Security and Medicare are paid for the owner. Paying yourself a salary out of the corporation under payroll. The IRS requires that you pay corporate officers and owners a reasonable compensation. Now you might be asking yourself, what is reasonable, right? It can be really tough to determine what a reasonable compensation may be for your role in your own business. However, how much you pay yourself can have a huge impact on your taxes and your business's livelihood. Make sure you seek advice from a lawyer or a tax accountant before making your final decisions. Each scenario is different from the next, so please be cautious. Now, I'm going to go ahead and wrap up with my final thoughts. Number 1, make sure that you pay yourself just enough. This will minimize overhead. Number 2, you might need to adjust your lifestyle just for a little while, right? Until you're growing your business, reviewing your wants and your needs, especially as you are growing your business, right? Number 3, look at your cash flow projections so that you could adjust your salary as needed, right? You can give yourself a bonus if you can, right? On an either weekly basis or bi-weekly, as well as planning as to what you want to get paid in the future as your restaurant or hospitality business grows. Now, guys, I'm so happy to be here with you guys, as always, every week. I really hope that I am teaching you something, that you are learning something, but I also want you to take action behind if you have any questions or anything like that. If you find yourself in this situation and you don't know how to get started, make sure that you click the link below, schedule a chat with me today. Take action if it's with me or with someone else, but do it. Don't let your thinking stop you. Thank you guys so much for watching our videos. If you found it helpful, make sure to share this video and subscribe to our channel. We create videos weekly where we help you structure, grow, and exceed your business goals with tax and accounting strategies. Bye guys, I'll see you next week. Bye.